The best way to learn about the solution you should create is understanding similar problems that have happened in the past and how those solutions were created. Where have there been problems similar to what I'm facing today? What solutions had to come about? But most importantly, what environment had to be created for those solutions to come about? Look into the internet, how the internet came about. Look into even telecom. How did telecom get consolidated? Even looking into computer processing systems, how did those come about? There were these major companies that were doing great work, but there was also a lot of regulation that had to be done, associations that had to be created, collaboration. I think that sometimes founders and CEOs, we don't realize that, yes, you're selling a product, but in order to truly win, there's this whole ecosystem of things that are happening. So it's either you're going to help create that ecosystem and drive the ecosystem, or you're going to get impacted by the ecosystem. And we just decided that we were going to drive it, because we believe that we have the best solution of how we should think about this problem.
Welcome to the Invisible Inc. podcast. I'm your host, Shubha Chakravarti, Chief Financial Storyteller at Achieve. Our guest for today is Kameale C. Kameale is the co-founder and CEO of ChargerHelp, whose technology tackles inoperable electric vehicle charging stations to ensure EV charging reliability. Her startup has raised over $21 million to date in funding and services stations across 17 states. Kameale has also led workforce development initiatives in partnerships with organizations including the U.S. Department of Labor, and is committed to empowering historically marginalized communities and is a thought leader in the clean energy and mobility sectors. Now, here's Kameale. Hello, Kameale. We're so happy to have you here today on Invisible Inc. Thanks for being here.
Thank you so much for having me.
So I've got a bunch of really juicy questions that I want to ask you today. But first off, can you just tell us a little bit about what your startup ChargerHelp does?
Sure. ChargerHelp is really looking at EV charging reliability. Charging stations are smart assets. A lot of the issues that occur with charging stations actually have more to do with interoperability issues, software issues than anything else. We believe in getting a large data set from the field, like actual field service data, troubleshooting data, and bringing that back into a platform in order to drive reliability and drive more over-the-air solutions. We've been doing this now for 5 years, and super excited to dive in more about it.
How did you even come across this opportunity? What triggered you and what got you thinking about this?
I've been in this industry almost now for 10 years, which is crazy. It started out at a company called EV Connect. I was probably the 10th or 11th employee there. My position was something called EV driver support. And so essentially, when an EV driver went to a charging location and they had an issue, I was the lovely voice that they got to chat with. And what sparked my interest is that sometimes EV drivers would describe a behavior of the charging station that I could not really see in our log data set, what the station was communicating to the cloud. Fast forward, consistently saw that in an industry, and not just at EV Connect, but across multiple software providers, and definitely thought that there was something missing. There was something missing in what the stations were experiencing. And there was something missing in regards to how we should think about the ongoing performance of an asset like the EV charging station.
So you see the problem, you see an opportunity, but then there are other hurdles that you have to cross to convince you that this is worth investing your time because that's more valuable than money. What were those triggers and what are the first steps you take to convince yourself that this is something that's worth pursuing?
For me, it was a little bit of happenstance. And so my mom had always had cancer for most of my life. And there had come to a period back in 2019 where her cancer had returned and it was actually more aggressive. I had done a lot of EV Connects, made a pretty good name for myself there, but then also was under just a lot of pressure of trying to take care of our mom and also the company. And so I had actually left EV Connect. And in the interim, I was always very curious about getting folks aware of the EV charging problem. And so I think that the convincing really came about with just the circumstances, with having to take care of an ailing mother. And then also, I guess, being so interested in this problem, started to work with the LA Clean Tech Incubator around producing content around, and then eventually landed into getting a contract. I guess looking back, I didn't really have a moment of being like, I'm going to do this thing. It was like a sequence of events that kind of pushed my hand into be like, I guess we're doing this thing.
And was there a moment where the light bulb went on? Well, I guess I'm a founder now and I have to go do all these things. What was that moment?
I guess it probably was after post our first contract. My first contract was with EV Connect in Southern California, Edison. And, we're like getting paid and I have to figure out like all these other things. I was like, oh, now, yes, you are a founder, like you have a company. And that was fascinating to me, like that switch over, because, my dad owned his own company. And for so long, I was always like, oh, I will never run a company. I was like, I like working for other people. It is very comfortable. And so I think, yeah, getting my first customer really turned that switch for me. And it was just surprising to me as well. Oh, no, you're really doing this thing. Okay.
And at that point, were you thinking venture capital, exits, unicorn, or what was your vision if you had one? Or was it more, let's see where this goes?
Yeah, I mean, for me, I was just obsessed with the problem. I think for me, I strongly believe in mass EV adoption. Not saying that it's the silver bullet, it's going to solve all the problems. I don't believe that, but is it a better way to move, than what we're doing today? And that really came about during COVID. I live in South Central Los Angeles, not too far from the Hollywood Hills and the Hollywood sign. But it wasn't until no one was driving their vehicles, their gas-powered vehicles, that I actually saw the Hollywood sign. And then start to get more savvy with understanding the air quality index and just savvy with even my mom's like cancer diagnosis, to just be like, how we're moving can be better. And I know that electric vehicles can be that way. We have a problem with the EV charging infrastructure. We cannot squander consumer trust. And so I wanted to become just like the biggest nerd about solving that problem. So I think like that's for me, it was never about unicorn, raising capital, or any of these things. It was just like, no, there's a problem to be solved. It doesn't really seem like anyone else is thinking about it the right way. Let me figure out how to solve it for the industry, and then be collaborative, right, as well on that journey.
Great. I love that. And I know we talked earlier when we met a couple of months ago, and you had this point you had made about how you got really involved with workforce development. So can you just connect the dots for me there and say, okay, so now you see the problem, you got this first contract. What happened then, and how did that lead into workforce development?
Sure. I mean, I think the first thing is just like understanding like my background. Like I'm from South Central Los Angeles. I'm the daughter of two immigrant parents. And even my mom worked for LAUSD school district, was a part of a union, and never in her 35 years of working for the school district did she make over $27,000 living in Los Angeles, and even with my dad starting his own company, a similar story where like he only could grow so far. And so I mention these things because I just, in my mind, to build a company, to build a business, you had to consider the worker. And so I think people put us in this box of workforce development. But to me, it was that, one, we knew that we needed to make sure that the industry was properly trained and understood what they were actually going after to fix. But then two, how you did the training, how you did the hiring, because of my upbringing, was of the utmost importance to me. So I guess we got put in this workforce development box, which I'm okay with. But to me, it's just like we're figuring out how to run a good business, and we're mindful of our labor force, not only for ChargerHelp, but the labor force for the industry.
So just so we understand, where does the labor force come in for ChargerHelp? How heavy is that investment? And where is that interaction between them and the labor force of the industry? Can you just walk through that a bit?
Absolutely. The first thing to understand is that the EV charging problem is not a labor problem, right? So just sending someone on site does not mean that you're going to fix the charging station. And we have to be very clear about that. However, getting someone on site that is aware of the protocols, understands code, understands systems, actually helps you to gather more data and information in order to be able to fix the charging station. So while we do see these are going to be great jobs, right, very coveted jobs, these are not going to be millions and millions of jobs. And we've been very particular about that. But, the thing that we do believe, though, is understanding a smart asset that's publicly deployed, like the charging station, can help people transition into what we think is going to happen as you bring more software into the built environment. So yes, it was an upfront cost because we had to create curriculum. We had to tell that story in a meaningful way. And we also had to bring on workers in order to properly build out our platform. But we've just been very cautious to make sure that people understand we're not promising millions of jobs. We're promising good jobs. We're promising a foundation to understanding this ecosystem, but we should not get into the mind frame that there's going to be millions and millions of EVSC maintenance technician jobs. I don't want to set people up for failure, and we've been very vocal about that.
So just so I understand then, clearly there's a big element of training your workforce, certainly, and then to some extent the workforce of the other side of your clients and whatnot. Give me a snippet or a tidbit of how this workforce development angle plays into your startup path and how it has influenced how you've grown your startup.
I mean, I think once again, it's less of a workforce development angle playing into our pet, but it's just how we're doing business. Like we believe that our current industry, they said, well, the stations will tell us when something's wrong. We could just send self-healing code. I even have competitors today that's like, oh, we have AI agents that can like solve software issues or that can do all these things. And what we believe is that there is not fully one or the other. We believe that you have to figure out where does human capital and where does the technology play. We believe that as you bring software into the built environment, you do have to have a labor force that is aware of software and systems and all of these things. So I think it's less of a workforce development angle and more so this is just the businesses of the future. Specifically as you digitize, built infrastructure, which we've never really done in a meaningful way before. And so, yeah, I think it's the business of the future. People will have to think about labor in a different way and how labor and technology plays together.
I love that. I love how you played that out. So I'm going to shift gears slightly, which is one of the other things is you've had multiple extra barriers to kind of overcome. You come from, let's call it a non-technical background. Certainly you were immersed in the industry. So how did you overcome this challenge and how did you kind of build what you needed in terms of resources and networks to start making progress?
I mean, I think one, I'm a woman of faith. And so I do think that there's just a lot of things that I've just been grateful, relationships and people and moments that I cannot look back on it and not see that there is, for me, like some type of divine connection. So there's just things that are unexplainable, places I've been, people I've met, people I've been connected to that I'm just like, how? Like literally, I'm just like, how? But so much of being, a non-technical founder and also just understanding my gaps as a founder has been collaboration of people that I've been able to meet, companies, people that have championed us. Every major contract that ChargerHelp has today, I can point back to an individual that championed the company at that major organization. From our contract that we had with Tesla to the contracts that we have now with utilities, it's just been people that have seen that we understand the problem, that we deliver on a service, and they've said, hey, you should work with this company. And so I think that being a non-technical founder and just having gaps in general, the way that I've been able to fill that is just through, I think, just like meeting people that believe in what I'm doing and being helpful to me, which I'm so grateful for, but I think like that's kind of it.
So, and just not to push on that, but to somebody who's on the other side listening to this and saying, how can I implement this in my own startup, right?
Yeah.
Can you give me some examples of how you clearly had to do something to prompt these meetings? Just walk us through what that might look like, what you were thinking, what kind of actions you took, how you progressed and learned along the way to do better.
That's fair. I think that at the end of the day, there's no one in this industry that understands reliability problems more than myself. Point blank, period. I am the expert of this industry. I am the nerdiest person when it comes to protocols and charging infrastructure and all that. And if I don't know something, then I definitely know a partner or somebody I can reach out to. So I definitely think that if you're looking to start something, I believe in building companies that solves problems. So if you're looking to solve a problem, and in order to solve that problem well, as a founder, you have to understand that problem better than anyone else. And the interesting thing about problems is that they're not stagnant. Problems consistently grow and grow and grow. And so, look, I've had to teach myself more things, become more technical than anything else. And then I think with that, it's a level of curiosity. Like I'm never not learning. And even when there's competitors that come about, I'm interested to understand how they understand the solution, how they understand the problem. So I think there is a level of obsession around understanding your problem. And I would say then that attracts people to believe in you, because if you understand a problem and you're open to being able to be innovative in your solution, I think there is a natural tying point there. And I think people respect that. And I think people trust it, because I think that's the biggest thing of being an early founder. Oftentimes it's a level of trust that you have to be able to showcase to folks who are going to work with you. But to your point, to be tangible about like my suggestion here is that I think you got to get ridiculously obsessed with the problem that you're solving. You have to know it better than anybody else. And I think that allows you to actually drive value and people notice that and they respect it. And then they feel confident to introduce you to procurement managers and things like that.
So there's also the risk that, I sit in my office and I learn everything there is to know. And then how do people find out? Like, where does that interaction happen? And what are you doing as a founder, and especially as a non-traditional founder, to get people to take you seriously, that you know your stuff.
Yeah. I appreciate you pushing me on this. Let's get there. All right. So yes. So knowing the problem, step one. I think step two is, I from very early on, I was very vocal about the problem, right? So first off, I use my LinkedIn a lot. Like I like to think of myself as a LinkedIn influencer to a certain extent. And I wish one day we could get paid for that, but maybe not. But so I use my LinkedIn to talk about the things that I know, right? So that's one. The other thing is, even right now, I'm running a LinkedIn series with the top 10 CEOs in my space. And so I collaborate with other people that maybe they know a little bit more in the edge cases of the problem. So also bringing in their network. So I think utilizing free platforms to talk about what you know and making sure that the things that you're talking about, one, are true, but two, that they're adding value. Like everything that we're looking at for 2025, because we think is of the utmost importance, is about the EV driver experience. People don't want to hear about reliability. They don't want to hear about, they want to understand, hey, if I am a business owner and I install this asset, how do I ensure there's a superb experience here to get people to continue to go so that way I can make money off of the asset? And so also understanding your audience. I think that's probably like a big piece to this as well. So yes, one, knowing the problem. Two, figuring out what free platforms can you talk about the problem. And if you don't necessarily have the following yet, are there like mid-level peers that have a bit of a following that you can do a joint LinkedIn Live? Like this LinkedIn Live, I come up with it. I spent no money. I hit up people that I follow on LinkedIn that they sound interesting. And we just talk for about an hour. And even since then, I'm super interested to see what my analytics will be. But I have so many new followers, so many new people, and even already new leads that I could tap into. So I think that's probably more of the tangible answer you're looking for.
And it is perfect. I love it. Which leads me to one other question, which is, I've seen you in a couple of different instances now. And one thing I've noticed is you're incredibly self-aware in terms of how, I'm not saying you become a different person, but you do a really good job of tweaking your message to suit your audience. As an example, let's say you're talking to someone like me. I don't know anything about, not that much about EV charging. Or maybe you're talking to an investor. You're still talking about EV charging, but it's a whole other nuance and angle that you bring to that. How consciously have you developed this as a skill? And what have you done to get better at it over time? Because you clearly do a very good job of it.
Thank you so much. I think that the first thing is, I think meditation helps. Like every morning I meditate. So I have a very strong process. So I think that helps just like as you're building something. I feel like sometimes, even today, I was telling my co-founder, I was like, I feel like life is happening to me today because I have so many things that I'm trying to get done. And so I'm definitely going to have to take a moment and a beat to just settle down. But I definitely think meditation and developing a practice of meditation, and even if it's 1 minute, 5 minutes, something about quieting your mind and like being present and getting into that practice helps you become aware of self. So I think that's one. I think the other piece that's been very helpful to me is I have the Stoic journals. And so I do a writing prompt every morning. And that's also a very interesting way to just think about yourself, how you relate with one another, other people. It's a reflection, something about, acknowledging yourself. And then also the reflective piece of writing down about yourself every single morning has been very, I think, helpful to me over the years. And I started that practice back in 2020 after working with a coach. And so I've been doing that now for almost 5 years. And then I think that the last piece is that I'm really genuinely interested in people. And so usually if I'm like talking to someone, maybe my delivery changes because like I'm very interested in who I'm chatting with and what will land for them. And so just trying to figure out, okay, what cues am I getting from the person that I'm chatting with? What's important to the person that I'm chatting with? And if there's a message or something that I want to get across, what's the best way to get that message across? But I think that comes from a level of curiosity and wanting to learn about the person that's listening to you or that you're in conversation with.
Yeah, and I'm going to ask you one more on that because I'm just really fascinated with what you just said. Okay.
Yeah.
So I totally get the meditation, the reflection, all of those are proven to actually improve your effectiveness. The twist is, let's say you're in a fundraising conversation, you're talking to an investor. First of all, there's some pressure on you, right? So you really need to raise the money, right? Clearly you're there because you need to raise the money. Therefore, there's a power differential. They have the money, you don't have the money. And there's this pressure that, okay, what's going to happen to my startup if I don't raise? And that's human nature. So can you walk me through how does this awareness and this audience sensitivity of who is this person and what's going to land with them, how would that have played out or how has that played out in a really high stakes conversation with a potential investor, for example?
Yeah, I mean, I think the first piece of this is like a level we go back and forth with this as found. It's a level of like narcissism to like a certain extent, right? So I think the first step is that I don't really go into an investor conversation acknowledging any type of power dynamics. So at the end of the day, they also have to invest money in good companies. And I guess like the other step to this is like knowing your numbers, making sure you have a good business, making sure you got your own margins. Like if you got a solid business and you got a solid story and you know the problem you're selling and all that jazz, I'm coming into the meeting that no, we are equals. Like you also are not successful if you don't invest in good businesses. And just so happens I'm a good business. And so I think coming into the conversation that way is very helpful. And then I think the other part is, I guess two things. One, I try to move through investors as fast as possible. And how do you do that? I have a very strong process of like when I'm fundraising, one, so just like when I'm talking to people, what I'm talking to about, what I expect to hear back from them. Do they understand my company? Do they understand my business? And so trying to weed out the noise. And so that way, when I get to the person that I'm really interested in them, I think that they're relatively interested in me. Then because investors, it is a relationship. And so then that puts me in the mind frame of like, how do I get to know you more? How do I understand what motivates you? How do I understand if you understand my business when you take it back to the IC board? How do I understand what excites you? Because that's the biggest thing about the investors you're chatting with is that they have to be so excited about your company that they convince the other people on the IC board to vote in your favor. And so I need to understand them just how I would need to understand a customer of what motivates them, what challenges them, what scares them. I need to know every single thing about this investor. So that way the story that I'm giving to them can come back out of their mouth in an authentic way that's authentic to them. That takes time. And I guess the last thing I'll say to that is that one, I don't believe in the terminology always fundraising. I'm not an always fundraising type of founder. But two, I do believe in engaging in relationships. I mean, when we close rounds, right? Most of the people that participate in the round, it's not people I just met in a year. I may have been chatting with them for 3 years ago, 4 years ago. We have an ongoing relationship. So by the time we get to this place, oh, I'm trying to raise capital, it's not like I'm just getting to know everything about them. Like we've been around each other. And I think so it's a long game play, but you tell me if that was direct enough, because now I'm trying to make sure I'm delivering on what you need.
I love it. So, I love what you brought up. I think there are two things that I want to get into on that. One of which is you talked about, I get to know them and I have this relationship for 3 or 4 years, right? So, I've talked to several VCs and investors, and there's a couple of schools of thought. One school I've heard, particularly from angels, is, hey, I want to know this person. I want to help them way before we ever have an investing relationship. So they may be relatively more open to, having a relationship, but a lot of investors hear from a lot of founders and, hey, can we have a cup of coffee? Doesn't really get you very far. I want to know what you've used, particularly with VCs and professional, semi-professional investors, angels who are very serious. What has worked in terms of getting through that first time?
Yeah, I think we've been lucky enough that we have like one, people typically know who I am, who the company is because of our online presence, because of, press releases. So I think that's like, I always tell people, I was like, you got to be like, and this is so kind of sexist, but it's like, you got to be the hot girl at the party. You have to figure out how are you the hot girl at the party, but you can't be mean, right? But you got to be a little like untouchable. And how do you do that? And so I think then it's really about consistently creating your presence. Like when I'm starting my fundraising process, we always start out at least a year or year and a half out before I want to close. And so usually in that first 2 months, we'll start dropping press releases. And so it's nothing about fundraising, but it's like, what customer have you closed? What deal have you done? Just drop the press releases. And so then naturally, usually, right, investors then start, hey, can I have a call? Da-da-da. Oh, no, I'm not taking calls right now. Just focused on the business. Like, reach back out to me, in another quarter, But like, oh, no, like, what's your calls? But not right now. That's like that analogy of the hot girl at the party. It's kind of just like people want to talk to you, but you can't be mean. You got to be nice, but you got to be the it person in that moment. And I think you have to figure out how do you build that momentum. And to me, the best way to build that momentum is, releasing press releases specifically around customer relationship, case studies, success stories. Like if you had milestones that you were supposed to hit in your last fundraising round, release the press releases about those milestones, not like directly on the nose, but like, like one of our things was that we were doing some work about bringing on the third-party partners, right? And so like, we're going to start releasing press releases around bringing on third-party partners, but that was like one of our milestones. So it's things like that has been helpful. So that way, when you want to build the relationship, you're not building it at a disadvantage. You're building it at an advantage because this investor actually wants to talk to you. So that's kind of like how that's worked out for us. And then the last piece is be kind to all of your stakeholders, be kind to all the associates at funds and firms. Just be kind, be a good person, because that actually goes a long way, because then people may warm intro you to other people, which is very helpful. But that's how that relationship building is. I've never had to do it cold. So I really wouldn't know how to do it if I didn't know an investor at all, to just hit them up and be like, oh, let's go out for coffee. Like, I've never had to do that before.
Before we dive back into our conversation, I want to tell you about Seed to Success. Seed to Success is our community letter with our proprietary insights on startup financial storytelling, tips, new episodes, and much more. If you find these discussions helpful in your entrepreneurial journey, use the link in the description to subscribe to Seed to Success today and get all of these and much more straight to your inbox every week. Now, back to our conversation. I love it. So the picture I'm kind of getting as you're talking is you start with this core of this obsession with the problem, and then you do everything you can to be the world's biggest expert on that problem. You go out with an attitude of, if not service, but at least of contribution. Like, how can I help others learn more about the problem, solve the problem? How can I match up with other people and build a network of others who are also interested in the problem? Then you have a very clear plan and a process of how I am going to go solve this problem, very clear-eyed. And then you build your entire fundraising around like this one kind of the central axis of things that are getting done, but all of it is kind of built around that. And then that's kind of closed with this larger envelope of how can I be a useful member of this community of people who are interested in the EV charger world. Is that a fair characterization of what I've heard so far?
I think so. I mean, oftentimes I talk to my executive team that like the way that I look at how we move, it's almost like there's like chess pieces on the board. And so you're doing a lot of things, but that's where the self-awareness comes into, because you have to be very aware of where all the pieces are at and how you want to craft the story and create the environment for your success. And so that's kind of like how I've looked at it so far. Will that change later? Maybe, but like in the beginning stages, that's how it like illustrated to me in my mind. That's how I think about it.
Love it. Okay, so there's one other point that I want to pick up that you mentioned earlier, which is I'm here selling a good business and therefore I'm confident. You mentioned how important it is for you to know your numbers. How did you develop that fluency? When did you become sensitized to that? And how did you kind of get really good at it?
Yeah, I feel like I'm still forever developing it. I think that I've gotten better at it by getting my butt handed to me in board meetings the hard way, because like I could get super caught up in solving like this problem. And then my investors like, well, how are you making money? Right. And I feel like that's the balance that you have to get. And it's like a forever kind of like, I think, something that you're building. So yeah, I think I've had it through just very hard, honest conversations with board members. And I think like as you bring people onto your board, it's like finding people that, for as much as you can trust them, that they have a genuine care for you as much as you think that they can, but that they will be honest with you, and aren't afraid to have hard conversations with you. So I think the more like board feedback that I've gotten, the better I've gotten with my numbers. And then also I have a group of CEOs that are a little bit ahead of me that I connect with. I'm in a group. It's led by this professor out of Duke. And we meet once a month and we get to talk to other CEOs and people who've exited companies before, and just hearing how they think about their business, how they think about their business model, their cost factors, how those things have changed over the journey of their business. So I guess to summarize, one, I've learned the hard way through just very brutal honesty, and me sometimes having to take it, sometimes being annoyed by it, but nonetheless having to figure it out. And then the other piece is just trying to find not necessarily a peer group. Most of the people that I'm talking to, their businesses are larger than mine, but not hugely larger, but like it's a step that I want to get to. And just being in their presence of how they're talking about their business, that has gotten me better at how to think about the numbers, right? Because I think like that's the biggest part about this. You can know your numbers, you can recite it, but how are you really thinking about it? How are you strategizing about it? And if you're doing things that maybe not make the clearest sense, can you talk about it through numbers of how you're going to make it better, how it's going to make sense on the long end? And that has been an ever growing journey for me that I'm still on, now.
Awesome. So let's say some board member gave you some piece of hard feedback. What happens next? Do you go read a book? Do you find a CFO type to coach you through it? And how do you get over that? I mean, I'm going to be honest, like if it happened to me, I'd be like really crushed, right? Of course, I'd get over it, but I'd initially be crushed. Can you walk through what that looks like when you get that feedback? You realize there's a gap that you need to now cross. How do you get past that?
Yeah, I mean, what has happened in the past, like, so my co-founder is on the board with me. And so usually like after, like if I've had hard feedback, then like her and I are kind of like debriefing and being like, okay, well, what did we miss? What didn't we understand? What do we need to fix? And so then usually from there, I tap my CEO network. So I'm just like, hey, like I'm struggling. And we have like a Slack channel. I have like text messages. So I might tap a CEO that maybe they've already exited the company. Maybe we're struggling with understanding what we should could be considered in a cost of sale or something to that extent. And then I will look at my network and be like, okay, what founder is closer to this or have experienced this before? Or I'll put out a blanket, hey, I'm struggling with X. Is there anybody that can help me? And then from there, yeah, it's just like a conversation. Sometimes you do have to push back on your board to be like, well, like, actually, we're not really paying attention to that right now, but here is why, right? So even understanding the strategy of pushing back. But yeah, no, it really is like I've had a hard conversation. Usually my co-founder helps me like not take it personally because I want to be great and I just have all these aspirations for myself. I could feel deflated very easily, but then it's always just like, okay, well, listen, lick your wounds, get it back together. And then, yeah, I'm absolutely reaching out to my network. I probably have about 20 CEOs from varying parts of this journey that I can like tap into for very specific things. And then they will show me, I've had CEOs show me their board deck or show me how they're looking at their models. And we talk through it and then I fix it. You know what I mean? And I do like, that's the one thing I believe I can say pretty confidently is like, then my investors and my board, they know if they bring something to me, I'm going to figure it out and I'll have it fixed by the next board meeting. I take that very, seriously.
Awesome. And how did you get introduced to this network of CEOs?
So it came through Entrepreneurs for Impact. So Entrepreneurs for Impact is one of the groups that I'm a part of. I was also a part of the LA Clean Tech Incubator, Elemental Accelerator, and then the other one was like Grid 110. And then sometimes like when you go to like invest, like sometimes investors will have like events for their portcos. So there's a couple of people that I've met through, like we just share an investor. So we're connected that way. But I think Entrepreneurs for Impact is always like my first kind of go-to group. And they're made up of about 100 CEOs. And then after that, it's probably that looking at my, like from Lacey to Elemental to Grid, there's a whole bunch of Slack channels of people. But I usually go to Entrepreneurs for Impact first, that group of CEOs.
And you said it was through this professor at Duke, right? How did you get in?
Yeah, so Entrepreneurs for Impact, you're typically invited in by someone else that's a part of the organization because he holds the group at 100 people. And so once you're invited in, you interview, and then depending upon that, you can get accepted into the group. We meet once a month in smaller groups. And then we have 2 in-person events a year where we are together for about 3 days, where they have speakers come in, past folks who have exited companies. Yeah.
Excellent. So you raised a few rounds so far. How much have you raised? From what kind of investors have you raised, and what kind of vehicles did you use for those raises?
Sure. So we've raised about 20 million or so dollars, and that's up into our Series A. I did our Series A maybe about 2 years ago. My first round was a priced round. So when we went out to fundraise, we were actually going out on a convertible note. But then we ended up getting an investor that wanted to invest more capital if we thought it made sense for the milestones that we were, going after. So that was a price round. And then in between that seed stage, I guess even taking a step back, like my pre-seed was actually pitch competition. So I did about $500,000 through just like pitching places, which was really cool. So it was non-dilutive funding that we got in early on. And so that helped us get a product, also get a contract. And so when I went out for my seed, we already had customers, we already post revenue. And so that's where we did the price round. In between my price round and my Series A, we did a convertible note, and that was to help us expand into additional states. which is funny because all of those states we retracted, we don't work in those states anymore. So just as a founder, like sometimes you may raise capital for something, you figure out, no, this is a horrible idea. And then you reallocate that capital for a different milestone. Then we ended up doing our Series A, which was a price round, and that was led by Blue Bear Capital. We typically look for funds that can either bring us technical assistance or connections. So we're a big data play. So we either, we need people that they're connected to data sets that we're interested in, or they have data sets that we're interested in. And then the other one is introduction to customers. And so a lot of the folks in our Series A were one of the two. So like Energy Impact Partners, their LPs are utilities. And it just so happens most of our customers now are utilities. So yeah, so that's how that has played out.
Right. And then you mentioned doing a price round, right? Doing it that early is somewhat unusual, I think. So what was the process like, and what were your big surprises? What were your big learnings? Can you just walk us through that a little bit?
Yeah, I mean, like the crazy thing, ended up in my first round, so I didn't really know anything different. It was really confusing to me, if I'm honest, like in that process, because I was like, oh, convertible note to a price round. Like I was learning as we were going. My law firm is Gunderson, and I would just shout out to them because I think they just do really well by first-time founders. And my lawyer at that point, I just told him, and I was just really honest, just being like, look, I just noticed if I don't really understand, and can we just spend time going through like all of these legal documents and helping me to understand. So yeah, so the convertible note, we went out for a convertible note. We had oversubscribed the round, and then Trucks VC, who led that round, they're just like, well, look, you can do more. We need to grow fast. We had a contract already. They're like, let's just do a price round. I don't think I knew enough to know if that was wrong or right at that point. We just went along with it. I think it's fine looking back, but I didn't really know too much of what was the up or downside. I think because of the amount, that's why they didn't want to do convertible notes. And usually people get a little scared of having large convertible notes because when it does convert, you really don't know the pricing. It just gets a little funky. So anyways, I think having Gunderson was very helpful to decide on that. And then after that, we did do a convertible note, a small convertible note. That was fine. And then, yeah, we did another price round at the Series A.
Got it. And then there's a lot of angst, or at least apprehension, around working with lawyers, and they're expensive and you can ask them questions and then the bill is kind of ticking up the whole time. And then there's also this question of a lawyer gets paid regardless of how your outcomes turn out, right? Because they're essentially at hired hand. Can you just walk us through your thoughts on how do you manage this lawyer relationship? How do you make sure that you're setting aside your interests as a founder, separating them from their interests as a lawyer, and making sure that you're doing what's right for you and managing that whole relationship?
Yeah, I think that one, getting recommendations from law firms is just like super important from other founders. Like, I think like that is the only way. Like, I think that if you're working with a law firm and you don't know another founder that's worked with them, I would say talk to founders that you know, and ask what firms they're working with. So Gunderson came recommended to me. I was also familiar with Cooley because when I was at my prior company, we worked with Cooley, who they were fine. But there's a specific lawyer, Cody, who's the partner at Gunderson, and so many LA businesses work with them, and he just has like a great reputation. And these are from founders that like I know and trust. And so, and their biggest thing was that he was really good for first-time founders because he explained things. He wasn't going to nickel and dime you for cost, and because they're a very reputable and large, investment fund. Because that's the other thing. When you're raising capital and you're working with another investment fund, and if that investment fund doesn't trust your lawyers or doesn't trust the brand of your lawyers, I've heard this from other CEOs, it can just get very contentious really fast. And because Gunderson is very well known by a lot of the investors, that allowed even like our conversations and our negotiating to just be more smooth, I believe. But I definitely think you have to get recommendations. I would not go cold on a lawyer that no one that they've worked with. So if you're looking for a good law firm, Gunderson is it. Cody is your guy. So hit them up.
Noted.
Sponsor this, actually. Tell Cody to send you some money.
Yeah, please do. I love it. We're looking for sponsors. So with that said, was there ever a conflict or concern on your side of how you're going to fund it, or were you just clear that it's going to come out of the round and therefore you weren't like super concerned about how you're going to afford?
So I believe that a lot of law firms do this, but Gunderson specifically, up until you raise the $1 million, but your bills are deferred. So you have to raise the money. So like if you don't raise, you shut down, then you don't owe money, right? I believe a lot of like the really reputable law firms have that program. So yeah, no, I was never worried about it because it was just like, well, if I don't fundraise, I don't owe any money. But if I do fundraise, yes, of course, like you got to pay, And then the last thing I would say, at some point, we got to a point where we only used Gunderson for fundraising rounds. And then I actually ended up contracting to lawyers that helped us with commercial contracts. Because that's the one thing that did get very expensive, is using like a bigger firm for your commercial contracts. Specifically for us, because we were working on a lot of utility and really large commercial contracts where there's a lot of back and forth. And that got very pricey with the firm like Gunderson. So then I ended up contracting to lawyers that actually do all of my commercial contracts.
How did you find them? Is that also through your referral network?
Actually, I think both of them I found out through the Entrepreneurs for Impact. They were recommendations. Yeah.
Excellent. So looking back on, clearly you've done an excellent job raising 20 million so far. Is there anything you would do differently, or how would you characterize or summarize your biggest learnings or advice to other founders trying to do the same?
I think after the A, I probably would have hired more slowly. I think that we came off of raising during a time period. And like, I feel like investors are kind of like this. Well, how much money do you need? Like, just raise more money, hire the people, like execute. It's like this whole like going really fast. And like, in retrospect, I feel like if we would have slowed down a bit, we probably would have hired, because we ended up 2 years ago, we had 60 people. And I think today we have about 40. And so we've restructured, and I feel like we're even more productive today than we were with the 60 people. But the thing that like really pains me is those are people's livelihoods, which we don't take for granted, right? So it's like, I'm sure folks know the risk level of working at a startup, but still, I wish we would have just like taken our time with hiring. That's like the only thing I would have done differently.
So how hard was that? I mean, especially for you, given your commitment and how sensitive you are to, the fact that your workforce is important. How hard was that process? Was it all at one go? Did you have to do it over time? Like, how did that work out?
Yeah, so we decided to do, just because like we were having positions that were just like, oh, we don't know how productive this is. So we decided to do a restructuring all at once. And no, it was really hard. It was just like, oh, like we got this wrong. Like how we structured the org wasn't right. It's always difficult to have to make those decisions and impact someone's like livelihood. I think our saving grace, right? Like we were really big on giving out severances. All of the folks that work at our company has equity in the company. And so I think that softens it, if you will, a bit, but nonetheless, it's not, you make you feel horrible. I mean, like being a CEO and a founder, like I was thinking about this today, it's the most interesting experience. You have to really stay even keel, because, you can have a moment where you get recognized for something incredible, but then might have to make a really hard decision that impacts someone's livelihood, like all in the same day, and it could be such a mind break. And I think that people like sometimes maybe over romanticize being a founder, but it's probably the hardest thing I've ever done in my entire life.
That resonates for sure from what I've talked to other people. So one other thing you mentioned was, you've talked quite a bit about your customer base and the fact that you work with Tesla, you work with utilities. Can you just talk a little bit about your go-to-market strategy, and how did you start off and how has that evolved over time?
Yeah, man, this one, I feel like when we write a book, this will be the biggest chapter. So the interesting thing, like even though there was a problem in the industry around broken charging stations, no one really talked about it and no one really had money for it. And there was no regulation to say you had to have working stations. So you could deploy infrastructure, go public, and 30% of those stations could be broken and no one cared. And so the first thing that I had to do was actually create laws, which at that time, my investors were like, either you're really smart or really dumb. Because my first hire was government relations. And I sent it to DC, and we started to work on federal regulations. And then we were also working on state regulations. So we passed a bill called the EV Charging Reliability Act in California about 3 years ago. But what it did was it required there to be an O&M contract on all publicly deployed charging infrastructure. And since that day, we've seen multiple states take up that requirement. And most importantly, we've seen the same language come about in a lot of commercial contracts. So it's so interesting. It's like I had to build the company and the industry and the market all at the same time. And I had to convince people that this would catch on, it would carry on. thank goodness it has. Like today, people cannot talk about charging without talking about reliability. And people do not talk about reliability without talking about ChargerHelp. And so it was like, but that was a go-to-market strategy. Like I had to create the market, but I had to be so convinced that the timing of creating the market would hit. And the reason why everything fell in line really was from the car OEM sector. And this was a hunch. I think I started to see some of this kind of like wheeled its head early 2020, even during the pandemic and different things. You start to see more car OEMs make commitments around electric vehicles. And so my bet, right, was that you're going to have this thing was going to happen. I was also paying attention to international markets and seeing that, we were significantly behind from EV adoption from international markets, and we were not competing internationally from an electric vehicle perspective. So anyways, yeah, go-to-market strategy first was that I had to create laws, which is crazy for a startup to do, and do not recommend because it may not work.
Noted.
Right. But we had to create laws. And then from there, we had to look at, okay, what is the product that the industry will buy today? And how am I setting myself up for the product that I know they need to buy? So it's almost like I do a lot of research on, switching from the horse and buggy to the car. That was crazy. Like people didn't know they wanted an automobile, right? You had to figure out how to sell them the automobile. And it's the same thing. Like people didn't know they wanted reliability service contracts that was a fixed rate and that was driven by data. So I had to bring people to the future while still making money today. So we first sold ad hoc services. We first did workforce development training. There's a lot of revenue early on that feeds into what the product is today, but was never what I knew would grow the business. It's just that I had to bring revenue while building the market to get to the product that we're selling today. And finally, we're here. Reliability as a service actually makes up almost, I want to say 70% of our revenue stream. And, I think that we have a lot of growth looking forward to next year with that growth as well.
So first of all, congratulations. That's awesome. I want to know, did you actually do the research on how they converted from horse-drawn carriages? What was the biggest, where did you find the material? I'm very curious.
Yes, YouTube. I like YouTube, everything. YouTube, and I have a ChatGPT agent that teaches me a lot. So I train agents in my spare time. So I have an agent that teaches me a lot, everything about changes that have happened and interoperability issues. So I have an agent about the internet, about switching from horse and buggy to the roads, all these things. So yeah. So yes, that is how.
So you actually watch all these YouTubes, you ask this AI agent to teach you what was needed to be done, and then you figured out how to apply this to the EV industry. Is that?
I mean, it's all happening at the same time. I think I had a hunch about things. I think I had an understanding of, I think this could happen. And I think through this whole process, that's this thing about just consistently learning about your problem and learning how your problem has evolved. And I guess that's the other thing I didn't really mention. The best way to learn about the solution you should create is understanding similar problems that have happened in the past and how those solutions were created. And so I think it wasn't I did all this and I executed. I think this was always an ongoing journey. And I think what I've uncovered in the last year that I've got very hyper aware about is where have there been problems similar to what I'm facing today? What solutions had to come about? But most importantly, what environment had to be created for those solutions to come about? And I won't go down too much of a rabbit hole, but for things people look into the internet, how the internet came about. Look into even telecom. How did telecom get consolidated? Even looking into computer processing systems, how did those come about? It's so fascinating. There were these major companies that were doing great work, but there was also a lot of regulation that had to be done, associations that had to be created, collaboration. I think that sometimes founders and CEOs, we don't realize that yes, you're selling a product, but in order to truly win, there's this whole ecosystem of things that are happening. So it's either you're going to help create that ecosystem and drive the ecosystem, or you're going to get impacted by the ecosystem. And we just decided that we were going to drive it and for the industry because we believe that we have the best solution of how we should think about this problem.
So I'm guessing that this idea to pass a new law or get a new law passed also came from those learning experiences?
Oh, absolutely. I think that looking at how regulation can nudge early markets, that was something I was very interested in understanding. Also looking at how if you don't tend to policy, at some point in building a company, policy will tend to you, right? And so looking at, what has happened from Meta to all these places, at some point, policy tends to you. So if you can't figure out a way that you and your company and the policy that's out there can be in alignment with one another, it's going to come back to you at some point. And so that was a big learning lesson of being like, we have a viewpoint of the world that we believe aligns with the common good, and we believe aligns with a lot of the policy work that would be presented during that time period. So like, let's make sure that we're a part of that conversation and not squashed by the conversation.
Amazing. So, I mean, it's hard enough for a B2B company to go get these large contracts, and having to do that, it's kind of like building the plane when you're flying it a little bit. How did you pull this all off in this short time frame? Like, what was the key? Like, you're only one person, or even with your co-founder, you're like two people. How do you make all of this happen?
I mean, I think that's when I go back to, I'm a person of faith. Like, I can't tell you. I mean, like, I feel like we've just been very lucky of having the people that believe in us. I don't know. And the thing is that's crazy, like during this whole time period, 2 years in, well, first year in, I got a divorce. 2 years in, my aunt passed, then my uncle passed, my uncle was murdered, and then my mom died. So like almost all of this, that's what I'm just saying, like, I really couldn't tell you. It fascinates me myself. I live in gratitude. Like, I am grateful for this opportunity, for this moment. And I couldn't tell you. I don't know.
So let's just ask you one more question, and then I have a few closing questions for you, which is, so you have this law passed. It takes time for the market to kind of digest and absorb all those relatively quick. If it's a law, they got compliance dates and stuff like that. Was that a significant tailwind that it pushed really hard and made your go-to-market easier? And was there anything else you want to talk about in terms of your go-to-market strategy that you think would be of interest or helpful?
I mean, the interesting thing about the law, it was like, and I have to keep telling this, my government relations person, it wasn't even that the law had to be enforced. We saw at the moment that a press release was made about the law and the idea that this thing was coming, you started to see it in RFPs almost within a month later. And I think because the industry is so new, I think people are just trying to grab onto and get an understanding of like how they should do this thing right. And so that law actually is just now being enacted, but we've been seeing the kind of like the flutterings of it. And that the biggest thing is choosing the right state. And so, I mean, people look to California, like literally legislators. We saw the bill passed in Maryland last year, and we're like, oh, we had nothing to do with that. But it's like word for word, the same bill. But I feel like that's the thing, is understanding like influence, and then also how people have to, I guess, think about the stuff that they're building. I don't know. But that was the thing that I knew to be true. I was like, we didn't even need the law to be enacted per se. Like, I would love for it to be enacted, but I think for someone to have thoughtfully have it written out and thoughtfully can correlate it back to, driver experience, to revenue growth, to reliability, that someone had just taken the time to acknowledge that this thing should be done, people automatically picked it up. And then with the go-to-market strategy, I guess the last thing that I'll add there that was very helpful to us is that early on, we joined a lot of accelerators that had to be tied to innovation centers. So specifically, if you're looking at, in our space is more so about utilities, a lot of utilities actually have innovation programs. And so it's like it's an accelerator, but it's different, where it's a way for a utility to really de-risk the products that they're looking to bring on. And so if you get into one of these innovation programs, like I know that Duke Energy has one, I know Exelon has one, I would just literally put in whatever utility and put innovation center, innovation program. They more than likely will have one. And what they'll do is they'll give you a pilot. So you got to apply to get in, but once you get in, you would get a pilot to do work with that utility. And every single one of the pilots that we've done, I think almost 5 of them, they've all turned into full-blown contracts. And so it's a great resource for the utilities. And then also as startups, it really allows you to build the right products for your consumer and for you to potentially turn a pilot, into a full-blown contract. So I guess that's another go-to-market strategy, is that we're always looking for opportunities to prove ourselves and with these larger companies. And then how do you turn a pilot into a contract?
Awesome. I love it. So I just want to close out with a few questions in terms of kind of you as a founder and your experiences and what you've learned. So I think you're as non-traditional as they come for this industry. So kudos to you for having achieved this much. What you've talked a little bit about what has helped you get through, but have there been, I'm sure there have been low points. Is there anything specific that you'd like to call out in addition to the meditation, the journaling, and some of the other things that you feel are important? What has worked for you tangibly and tactically in terms of you get hit, something bad happens, you have to let go people, whatever the case might be? What's something that you keep going back to?
I think the three things. I mean, one, unless there's like something that I have to get done, which like that goes far between, I don't work on weekends. I'm not a Saturday, Sunday person. I never have since I started the company. I don't do it because Monday through Friday, I might start at 4 a.m. day and maybe finish maybe around like 11 p.m. midnight, right? And so my Monday through Friday may run really, really long. But because of that, Saturday and Sunday, don't call me. Don't ask me about ChargerHelp. If I'm out with you, I'm not going to talk about my company to you. Like my friends know, like, nope. So figuring out whatever that is for you, that might be Friday afternoons is always a no. I forgot what founder there's a major CEO of a big corporation, and he was talking about one of the things that he always wanted to protect was his marriage. And so he said that every day on Wednesdays, he always left at 4 p.m. to have dinner with his wife. And this is a big time CEO, but he did that for almost 20 years. And so he kept his marriage and always drew that barrier. And people just knew, like, it didn't matter. I could talk to you tomorrow about that. So I think it's so important as founders to figure out what that boundary is for you. And it looks different for every single person. So I wouldn't say everybody has to do it my way, but I'm just like, for me, it was just like, I will run to heaven and earth Monday through Friday for ChargerHelp, not Saturday and Sunday. No, thank you. So I think that's one, figuring out what your boundary. I think the other piece is like, for me, it's like my family. My family is so important to me. Like during the holidays, we're off next week at ChargerHelp. I am off. Like I host events with my family. Like we have game nights. I have 3 brothers. I force them to hang out with me. They're all younger than me at any chance that I get. And so I think investing just in having whatever those relationships that mean a lot to you to do it. And then I think the last part is just like having really good friends. Like I have a set of girlfriends that like both of them are actually VCs. I call them, they live on the dark side. They're VCs, but I mean, and they're like my best friends and we're like neighbors. And even like last night, we had to go to this holiday party, but then afterwards we all just came to our house. We all have dogs. We like sat in my den and like watched like Traunchy TV together. And it was just so nice. But even with them, they're the type of folks that can relate to me. So outside of just having like a CEO network, like if you can find friends that like really understand what you're going through. So if I could be like, hey, I have to like do this really hard thing tomorrow. I'm a bit nervous about it. They really understand what that means. And they be like, okay, let's strategize about it. Or do you need a break? Let's get a glass of wine and then strategize. Like, so having somebody, a group of friends that like really get you good. I think like that's the biggest thing. Like as a founder, this space can feel so lonely. It can feel like you're just by yourself, that people don't understand, right? Like people may think like, oh, well, she's too hard on us or she doesn't, da-da-da. But people really don't understand as a founder, like the weight that you carry, especially when you take on venture capital and when you hire people and you're responsible for their livelihood. And so community is just so important.
I love it. Love it. And so somebody who's maybe 3 years behind you or a few miles behind you, what are the top 3 pieces of advice, learnings, observations, thoughts you would offer?
I think the first thing is just don't give up. Like, I mean, like, I feel like there's so many hard moments and you may think that like your back is against the wall and you can't figure it out. I would say don't give up. And a good way to remind yourself not to give up is to really, one, read other CEOs that have been successful. If they have any books or memoirs out there or even like YouTube's, like one of the ones I came up about recently that I really enjoyed is the CEO of FedEx. And hearing how he stood up FedEx and he's still the CEO today and just what he had to go through with FedEx, like it's fascinating, but it allows you to put things in perspective. And even like, I don't know how much people like the Amazon CEO, but even him, he has a very interesting story of like where Amazon was to where it is today. And like the moments where he had to give up a lot of his company in order to get a little bit of capital. Like there's always these moments that can feel hard. The other podcast I would say folks to listen to is called Business Wars. Business Wars is very interesting because it talks about, different companies and how they have to go head to head and also how you should think about your competitors. So it's always about 2 competitors and it's always fascinating to me how competitors interact with one another and where the collaboration piece is, where is the competitive piece, and even like what are some of the crazy moments that had to happen to have these companies be where they are. I think sometimes people think like you just have this straight line trajectory, everything's great. But it really is like sometimes you may think your company is going to collapse and fall apart, and then tomorrow it doesn't. So that's one. Don't give up. I think the second one, like I said, is just get a strong community, whether that's other CEOs, friends, family. You can't do this alone. You got to talk to people. And then I think the third one is I believe that like meditation, journaling, figuring out a way to be introspective while building is so incredibly important. And the more you can develop the habits now, it was like 3 years ago, the habits in the beginning, I think they'll pull you through in those moments when it's like really, really hard.
Fabulous. Is there anything that you wish I had asked, but I didn't?
No, I don't think so.
Fantastic, Kameale. This has been truly one of my most fun conversations. I'm really impressed again by how much you've accomplished and how amazing you are. So thank you for taking the time. And you can be sure that me personally and all of us here will be rooting for your success. Definitely count us as your big fan. So thank you very much. And we'll talk to you hopefully soon when you've gone public or been acquired. We'll have you back and feature you as an alum. Thank you very much.
Thank you. I've received that. Thank you.
And that's a wrap for today. Thank you for tuning in. If you find these conversations helpful in your own journey, please subscribe to Seed to Success, our weekly community letter with tips, insights, resources, and more. If you have any other questions relating to startup finance or financial storytelling, send them over to me at chakras@achieve.co. That's chakras@achiiv.co. We'll see you on the next episode of Invisible Ink. Now, go achieve.